Hello and welcome to the Hash for Wednesday, March 10th. Starting to be spring-like out here, out these ways. So we are jazzed up and ready to go. We have our cast today. Naomi Brockwell, Ben Powers, Jen Sanasi, special guest star, Nate DiCamillo in the house, filling in for Will Foxley. How you doing, Nate? What's up?
Good.
Good. All right, I'm pumped up. Let's get to this thing. Naomi, lead us off with our opening story.
Absolutely. Free money for everyone. So Congress is set to pass a $1.9 trillion coronavirus relief bill today. They are voting on it right now. You can see them right there on C-SPAN. So far, the government has appropriated $3.7 trillion for the pandemic. That's more than anything ever in American history. And Bitcoiners tend to be against this stimulus. Some people are wondering why. Like, people love checks in the mail. They like to receive the $1,000 arriving at their doorstep. But many don't understand the effects that printing has on the value of their money and that it tends to hurt the lowest income people the most. So before I throw to the group to get their take on this question, why Bitcoiners in particular are against this, I want to just throw up the M1 cash chart from Fred. So to put it another way, 25 to 30% of all money ever created by the Fed was created last year. So that is a staggering figure. And now they're printing another $1.9 trillion. Now, this is exactly the same climate in which Bitcoin was first created with the bailouts of '08. So it is no wonder that Bitcoin is booming right now. And to explain what Bitcoin has to do with all of this, I'm going to throw it to the group. So why are people interested in an asset that can't be inflated away, team?
Nate, go in. Let's go, man. You've been doing a lot of economy reporting lately, so you're well poised for this one.
So I think this started with a letter from Anthony Pompliano, who we all know on Twitter, and he had kind of written a letter to investors trying to argue that the inflation that would be created from the stimulus bill would actually further inequality in the United States. He was also a little upset about kind of more funds going to like state and local governments than going to citizens. It doesn't necessarily present solutions in response to like what should the U.S. government do, but we all know that Pomp kind of believes that Bitcoin is kind of the solution to closing that inequality gap. The amount of inflation or the increase in the money supply it's an interesting question. Most economists actually aren't looking at M1 so much as they're looking at the debt to GDP ratio, which is now
also
over 100%, which is concerning. Where I think Pompliano's thesis might come true is if we experience hyperinflation, which would be double-digit inflation, which the majority of economists don't see coming. We might see a little bit beyond 2%.
Coming when, Nate? Because the question is about time frame, right? Because you have a lot of economists who are predicting it, but they're saying, well, it could be 10 years. Like people like Gene Epstein, most of the Austrian economics camp is saying, well, we are going to see it. A lot of them are doomsayers who are saying, it could be any day now. Obviously, Michael Saylor is on that bandwagon. Otherwise, he wouldn't have transformed his entire treasury asset collection into Bitcoin. But people like Gene, who are usually very conservative, are now saying this is unprecedented in American history. This is so much money we are printing. There is no way this will not have an effect on the economy, but it could take like 10 years to trickle through and really hit that hyperinflation. What are your thoughts on the time horizon?
Well, timing is tricky, and Bitcoiners are right to go and criticize like Federal Reserve economists that have consistently undershot inflation or overshot inflation in their estimates. I think Jay Powell, the Fed Reserve Chair, his estimate for when we might see 2% inflation on average is 2023. But again, the Federal Reserve wants to actually hit that target. They actually want to see inflation. As for like this bill and how it might affect Bitcoin, I actually think that this bill might discourage a flight to safety. It's going to discourage savings later on. So you're going to see more like smaller retail investors get more into Bitcoin. So I think in this case, if Bitcoiners want so much US dollars in terms of inflows from institutional investors and that sort of thing. They're going to have to kind of kiss the feet of the U.S. government in this case, because there's going to be a lot of people that are willing to they're going to have discretionary income. They're going to be willing to go and invest in Bitcoin.
Well, I think that it's also important to break this down for people who may be new to this space and wondering why Bitcoin is like, no, don't send out these checks. So there's a very real effect that happens when you print lots of money. It's the law of supply and demand. You have lots of money being printed. It dilutes the supply. And so your savings lose money, which really does hurt low income people. They usually don't have access to these more sophisticated financial tools where they can invest in the stock market, which generally tends to bump with all of this, because we know that the Fed, Wall Street has like direct injections from the Fed into the economy. So, your stocks are going to keep rising as inflation continues. So I think that the issue is that Bitcoiners have discovered, because they're understanding more about monetary policy than the average person, is that when you have a limited supply of something, the more people that get involved, the more valuable that asset becomes. So what we're seeing right now is people recognizing the value of Fed not just printing all of this money and not diluting the supply, but actually having a fixed amount is tremendously useful. And now we actually have a choice, right? We think about how Bitcoin was created. It was in the wake of '08. You literally had Satoshi Nakamoto right in the Genesis block. It was an article from the Times. It was a headline that says, Chancellor on the brink of second bailout for banks. So we were talking about mass bailouts. The same thing we've got here. Like, let's not pretend that this stimulus package is just to help poor people and send out checks. There are insurance companies that are getting big bailouts from this. There are high-spending cities and states that have been, fiscally irresponsible for a long time, getting giant bailouts. And poor people are going to suffer because the value of their savings is going to decrease. So they may see a check in the mail, but they don't understand the effect of that, is that the savings in their bank account is all going down. So, the amount of US dollars in existence has risen 41% last year. Now it's rising a huge amount more. We're going to have to see what effect this has, because we have never been in this territory before regarding stimulus and money printing.
Yeah, but we're removing this from like a social context. And I think that's really important to mention. There have been economists warning about hyperinflation for a number of years now, and we haven't hit that point. And I think particularly in the midst of this stimulus bill,
because we haven't had the inflation that we've seen now, Ben.
Sure, we're seeing it right now, but I think this underplays the actual good that this is going to do to people on the ground. I think if you're going to talk about the decreasing savings of people in low income and other things like that, you have to talk about the lack of minimum wage rising. You have to talk about the lack of access to financial institutions in any sort of way, and also just the massive wealth stratification that's undercut the social safety net in the US. So I think there's a lot of other things to take into consideration here. The retail aspect of accessing, Bitcoin and other sort of cryptocurrencies that might be a greater store of value is something we could come see out of this. And I think that could be interesting. The, Robin Hoods of the world, allowing people to start to dabble in this as a way to hedge against some of the inflation maybe you're talking about. But I think this is a much larger conversation as the pure economics around what the costs or benefits of this bill might be.
I mean, it sounds nice when you say things like that, which is always how people get these bills through. They say, well, it's going to help people on the ground. The end effect of this is that people lose their savings, which is what Bitcoiners understand, which is why they're involved in this alternative currency in the first place.
I mean, wealthy people don't lose their savings, that's for sure. And so if you think about alternative ways and mechanisms of giving people money who have less access to it institutionally, I think that's really important. Particularly, if you're looking at this idea of debt and this idea of inflation is something that's constantly bandied about as like a political football. And like when Democrats are in power, you push it forward. When Republicans are in power, they just do tax breaks for people and give the rich more money. Like everybody uses it as a political cudgel. And therefore, I think the debates around this get really, really skewed in a way that is hard for people to nail down in any sustainable way.
Well, I guess the outcome of all of this is that now at least we have an alternative so people can choose whether they want to keep their money in cash or in Bitcoin.
Speaking of a major firm that's doing that, let's change gears and go to this idea that I like to call the Bitcoin proxy stocks. So the news here is that yesterday, U.S. mega bank JP Morgan filed papers with the Securities and Exchange Commission to launch a cryptocurrency exposure basket. Now, JPM has historically been pretty anti-Bitcoin. These are the famously helmed by Jamie Dimon, who has not been a Bitcoin fan historically. But what is indicated here is that more and more financial institutions on Wall Street want to give their clients exposure to cryptocurrency in some way, shape, or form. So the interesting thing about this basket is that it's all the publicly traded companies who are deep into the Bitcoin game. And I think that's super interesting. So, Nate, I'm going to kick this to you because in some respects, these 20 companies these companies in this basket are sort of like the publicly traded companies that we care most about. And top of this list is MicroStrategy. Second by percentage breakdown in this basket is Square. We have Riot Blockchain, which is a Bitcoin mining machine manufacturer, and a number of other companies that are quite interesting. Talk to me about this idea of like Bitcoin proxy stocks, and especially this idea of publicly traded companies gaining exposure to Bitcoin for various reasons. What's your take on this in the last few weeks? We've seen it kind of an uptick here.
Right. So I think this is interesting. I think it's a good way for investors that can't necessarily expose themselves directly to Bitcoin to get some kind of exposure to Bitcoin. You'll see this a lot with pension funds that might go and invest partly in a VC that's investing in blockchain or crypto companies. I do think the management fee here, I believe, is 1.5%. 1.4%. Thank you. So that does come under Grayscale's Bitcoin Trust 2% management fee. It's a little bit higher compared to other new funds that are trying to race to zero fees. And the ETFs that are coming in Canada, like CI, is 0.4%. They're poised to launch a Bitcoin ETF in Canada. So this could be an interesting new investment vehicle for investors, or it could be blown out of the water when Bitcoin ETFs are approved by the SEC. It's hard to tell.
Yeah, Bitcoin ETF is sort of the elephant in the room here, right? Bitcoin ETFs give investors exposure to an asset class without them having to hold the underlying asset itself. So the Bitcoin ETF has been sort of the white whale in the US. The SEC has long refused a laundry list of applications to get this thing out to US investors, citing market manipulation and other concerns. So I'm going to kick this to Naomi. As the institutional the institutional land grab continues, and this is another vehicle that these markets are sort of spinning up in inventive ways to get access to this upside when they may not be interested in holding the Bitcoin itself. So I'm just curious for your take on that.
Yeah, I think it's super interesting. I think these investment vehicles are always an experimentation. Obviously, these companies like MicroStrategy are so intrinsically tied to the value of Bitcoin at this stage because so much of their wealth is tied up in it. So people have been calling MicroStrategy like a proxy Bitcoin ETF ever since they've been pouring their money into it. And so it is definitely an interesting concept. Meanwhile, we have Canada. I think they're onto like their third ETF at this stage. It's like launching the first one, I think it was just a couple of weeks ago. So, it is really exciting seeing this space move forward in other ways. I like the idea of like a basket of assets. I like different elements coming together because it does provide something a little bit more stable. It is going to be a little bit more stable, I think, than Bitcoin itself because you won't have the same volatility because it will sort of be spread amongst other risk areas. So the company itself obviously is going to play a part in the value of the company stock, but Bitcoin also will play a part. So we'll see, what happens and whether this goes through and whether it's popular. Lots of things could come of it, and we could get an actual ETF approved in the meantime. So maybe this doesn't go anywhere.
Jen, as our resident Canada expert, is there a lot of chatter up there these days about these Bitcoin ETF products? The first ones in North America are up in Canada, which has been interesting these last few weeks to see money pour into those vehicles. Like, what's your take on the Bitcoin ETF scene up north?
I was actually surprised that Canada was first to the ETF scene, but there is a lot of chatter. It's making the headlines. I always say it's becoming more mainstream. People are asking a lot of questions about it. And I think Naomi and Zach, you've explained really eloquently what the difference is between holding Bitcoin and holding an ETF. And so, I hear a lot of questions like that. And so I'm just going to grab exactly what you said. And that's my response to Canadians now who want to know what the difference is between an ETF and actually holding Bitcoin. So people are excited. We'll see how it pans out here. If we get a whole bunch more, if we just hold at 3, it's been a pretty, what's the word I'm looking for? It's pretty, fun 3 weeks to hear about all the ETFs that have been being released. Naomi, you wanted to add something?
One thing to add to that, I mean, I obviously am going to be on the side of holding Bitcoin itself because I like the idea of being your own bank and having control of your own money. I will say that an ETF does have a lot of upside. For example, you can use it as an investment vehicle in your 401k. So there are lots of tax benefits of holding this because you won't have to pay the capital gains as your Bitcoin increases in value. So there are lots of reasons why people might want to participate in an ETF rather than Bitcoin, especially for people who are building up their 401k. So it is an interesting debate, and there are definitely pros and cons on both sides.
All right, we are going to be continuing on this topic right after the break. So stick with us for more discussion of the looming Bitcoin ETF in the US market. We'll see how it goes. Talk to you soon.
All right, y'all. So last night, CoinDesk discovered that Grayscale Investments was hiring ETF specialists. So Grayscale has been the market leader with the Grayscale Bitcoin Trust for around, I think, 7 years now. They're also owned by Digital Currency Group, which is also a parent company of CoinDesk. Just disclosure there. It's a move for this market leader. They're during a time in which their premium on their Bitcoin trust and their Ethereum trust were trading at a discount in negative territory. So also at the same time, the company is DCG is buying shares of the Grayscale Bitcoin Trust, similar to like your kind of company stock buyback program, where you're looking to kind of improve the financial ratios of your stock by buying more shares and increasing the value of the outstanding shares. So I was curious to know, Zach, Grayscale is coming into this with VanEck and Valkyrie have already filed S1s for the Bitcoin ETF. Do you think that they can shift and pivot and compete with these other firms?
I have no idea, but I do think it's a really interesting defensive move by, as you mentioned, a market leader, right? So clearly they've had a good 6-7 year run of essentially being the only game in town for investors who wanted to get access to Bitcoin's upside without necessarily, again, investing in the underlying asset. So for them to sort of see the writing on the wall, see a SEC leadership change taking place, and maybe by the end of this year or even next, seeing a Bitcoin ETF approved in the US, it's interesting that they're doing this hiring push right now, right? They're trying to get ahead of the curve. They haven't filed an application, to our knowledge, with the SEC to get an ETF on the market, but they are certainly hiring 9 people to help them spin up an ETF business that may also not even be limited to just Bitcoin, right? They have the Bitcoin Trust, they have the Ethereum Trust, they have a number of trusts that give investors access to these markets. So I see it again, interestingly, as a defensive play, again, with that prospect of an ETF approval somewhere on the horizon. And for a major player to get in such as this is certainly worth watching, because it could be interesting if they beat all these other firms to the finish line and getting an ETF approved. That would be quite interesting. So yeah, that's the best I got there.
Yeah, I'm really curious to see if they end up converting GBTC directly into an ETF, or they end up starting with a separate secondary fund. There's a lot of institutional liquidity in that fund in GBTC. So I'd be curious to see kind of where they go from that. And if they're able to, in the ETF space, it's still going to be a race to zero fees. If they're able to actually offer something that's going to be more attractive than already there and what might be coming in the US.
Yeah, and you see it with this new crop of Bitcoin fund competitors, right? It's all about the fees. You're well versed in doing this reporting and sort of getting into the weeds and into the fine print about what the management fees are exactly, because really it is that's where these people are competing. The fee savings that they can pass on to their customers who are taking these positions.
Right. And also if who their custodian is, like who they partner up to launch this ETF with, will be really interesting to see. It'd be interesting to see if there's any kind of value still in Bitcoin trusts and launching Bitcoin funds after an ETF is approved.
That's a good question. I hadn't thought about that.
Definitely in terms of whether you're comparing a managed fund to an index fund or just to an ETF, I would definitely say that the ETF is going to be a lot more in people's best interest. Managed funds are notoriously bad at picking the winners and losers a lot of the time, and they charge a huge amount for the pleasure of doing so. So just having an index fund which automatically tracks the best companies out there or the price of something, I think is going to be in people's best interest, especially if they don't want to have to pay all that extra money in terms of fees.
Yeah, I mean, for now, that's just been, that's been the table stakes, right? You're paying those premiums because it's your only way into this market, and that's fastly changing. Right. Like we've seen a bumper crop of Bitcoin funds have emerged over the last, I think, 6 months. We have like Osprey, we have like the Block Tower. Didn't they have one? There's like a Cross Tower. There's like a laundry list of new Bitcoin funds that have emerged to sort of knock the Grayscale Bitcoin Trust off its pedestal, and maybe some of that is working. So Grayscale is trying to get ahead of the next trend, and should they be successful here, as evidenced by this hiring push, that'd be interesting to watch.
Mm-hmm.
All right, Jen, take it away. What do you got?
All right. Well, the Twitter accounts of several influential figures in the crypto industry were suspended last night. I'm sure all of you guys saw. So last I checked, some people are still waiting to get their accounts back. Willy Woo, whose handle is Woonomic, was told by Twitter that he was flagged as spam by mistake. So this just reminded me of our YouTube channel being taken down recently. Naomi, I know you have a lot of thoughts and opinions on this, and so I am going to throw to you.
Lots of things.
I know, and I know we're going to have a discussion right now about decentralized social media, but I think what I would love to discuss in this little chat is how do people, so these people on Twitter have hundreds and thousands of followers there. They have all of their content there. If we want to transition to decentralized social media, how do we start moving our followers to decentralized social media and our content? Like, how do we just need to start over and build from the beginning? Because that sounds like a really massive task.
That's a great question. I mean, when Library first started, which is like a YouTube alternative, I just synced my account and didn't look at it for years. So that was the great thing about platforms that just literally mirror your content and build it up, is that I started building out a following without me putting in any work or effort whatsoever. And then years later, my friend Joelle Valenzuela was like, "Hey, Naomi, have you checked out Library recently? It's actually booming and there's a huge amount of activity." And I was like, really? And it took a long time to head over there and check out the amazing community that's grown. Obviously, as places like YouTube became more draconian, more people are looking to places like Library or Odyssey, as most people know it. I think that we need like a Twitter version like that. If we could have a decentralized Twitter that just mirrors your content so you don't even have to worry about that stuff, but Twitter is, again, a different beast to something like YouTube. So I think it is more difficult to create that. YouTube, you're posting videos and you might refer to them again a year later. If you're referring to your tweet a year later, it's generally not in a good context. It's generally like someone attacking you, say, "You said this a year ago." Like, I sometimes wish that my tweets would just disappear after a year. So I don't know what the solution is there, because there's such a network effect in being on a platform where all the activity is happening. People don't want to leave. They have a lot of leverage to keep people there because they have all of the customers. I don't know, Ben, what are your thoughts on this? You're fully in the world of decentralization and privacy and social media.
And also fully in the world of Twitter, for better or worse.
I know, aren't we all?
No, I think it's interesting. It's something I thought when I was reading this story, and correct me if I'm wrong, Jen, but I believe Willie Woo was mentioning that there was a reference to spam and like spam kind of content. That was the reason for the suspension, even if it was inaccurate. I think that's really interesting. We get tons of all over Twitter and crypto, there's like tons of reply, like spam bots, like pushing stuff out and all these other things. And sometimes it becomes, unfortunately, like hard to differentiate between somebody, talking about crypto or certain coins or things in like a nuanced way that they're advocating for based on real grounds, and then just complete spam, like airdrop content, blah, 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 like send Bitcoin here, I'll double it, and that sort of thing. So I think initially there's going to be troubles about moderating this sort of stuff. But at the same time, too, something that's brought to mind is just also even there are decentralized alternatives out there. People are going to have to go there, but I'm curious to see what communities those cultivate in some ways, like Blue Skies, the open source Twitter alternative, they've been working on, and they have been working on for years, it seems now. But also just the way that these social media companies and platforms, individual cultivate a certain way of communication and individuals on there. Like you communicate on YouTube differently than you communicate on Twitter, differently than you communicate on, LinkedIn or something like that. So that's just a thought that came to mind here, is how those communities might grow up amongst decentralized platforms.
Yeah, I think people should start to check out what is already available there and start to hedge their bets in case Twitter just does a full anti-crypto run, because lots of people have had their accounts shut down. It is dangerous building your community on a platform where the rug can be pulled out from under you. And there are lots of alternatives. There's, I think I'm on like maybe 20, right? And it's a lot to keep up with, but like explore them, like Memo.cash, Minds.com. Yeah, exactly. Rig.cash. Like there's so many different things to explore. So go and explore this wonderful world. Zach, what were you
I think it's a big shout out to the network effect thing that you mentioned, Naomi. Everyone wants to be where the party is. We see that in social media. We also see that with these financial platforms, right? Like Ethereum is able to capture DeFi because to a large extent, that's where the party is. They've captured the network effect despite those ghastly gas fees. So I think, there are alternatives out there, and like, I'm sure you have like an Elo account from, remember when Elo was a thing like 10 years ago, or like Mastodon, but the party's not there. So like, why do I want to be there? Until people sort of like vote with their feet in a mass scale sort of way, I think these titans of social media are probably going to see their market share. It'll stay fairly steady. But again, experimentation is good, but when we're talking about these networks, they work best at scale. So I think that's the interesting thing to watch.
We are going to take a quick break now, but coming up after the break, we're asking the question, are your security cameras safe? A lot of people are really worried right now after a major hack. So more details on that to come.
Nice transition, Zach. Hello, and welcome back to The Hash, where we discuss the daily stories going on in the world of crypto. Now, this is a story about a hack, because hackers are just going to hack. According to a report from Bloomberg, a international hackers collective breached Verkada, which is a little known, if you're just a general person, surveillance basically company that accesses security cameras, offers those, and also offers facial recognition technology involved in it. Now, basically, hackers were able to access over 155,000 live feeds of cameras and everything from prisons to hospitals to one of Tesla's factories, as well as Cloudflare, which is a major software security provider, in some of their offices. So we can dive into the details here, but first I think I'd be curious to get, Naomi, your reaction on this one and what some of the issues at play here are.
I think my facial expressions say it all. Like my reaction is like, as you all know, when I start out this show, I have this little thing I take off my camera, which I have on every camera because it's a well-known fact that hacking cameras is incredibly easy. And if you don't have a camera cover, you should invest in one or get a bit of tape and stick that over your phone, stick that over your computer. This is not a conspiracy theory. This is proven time and time again that your camera can just be turned on and you don't even know it. So it is not surprising that this happens. It's kind of funny that a place like Cloudflare, which deals with security, has been hacked. A lot of people rely on these centralized camera services. I mean, there's a good reason why I don't have a Ring at my home. I just feel like it's this wonderful network where people can hack into to see when you are or are not home. And a lot of people think that they're getting security, and what they're actually getting is a huge invasion of privacy, which degrades their security in a lot of ways. Ben, I would be curious to hear about maybe some more secure options. There are definitely companies out there that don't link to the wider internet, or they just link to like an intranet within your home. They seem like much safer options. What should people be looking at instead of joining these behemoths that once they get hacked, all of your privacy is gone?
Yeah, I mean, I know IoTeX is one company that's worked on sort of a blockchain-based localized solution for a IoT camera for your house. Think of it akin to like Ring for Amazon, but decentralized in some ways. And then there are a couple of other sort of self-sovereign computing companies that are working on helping people create servers in their own networks, like localized at their house. So not connected to like a larger Wi-Fi network or something like that. But I think, this was a really good example in my mind of where central distribution networks really fail. So the hackers were able to access a super admin password and username just publicly on the web and get access to this software, and then could just kind of beam themselves in, not only accessing the entire archives of all these cameras, but also all these feeds in real time. And it shows that, this isn't the idea of like a honeypot and interesting data isn't just some remote thing that could never happen. Like this is a very real instance of, that people were seeing, and Bloomberg reviewed a video of like hospital staff, 8 of them like tackling a man in the hospital. And on their website, they're talking about how, hey, we have this great system that allows us, is HIPAA compliant and allows us to, monitor things going on. And it shows that these things all have a darker side in a lot of areas. And, if you're able to access this one super admin account, you get access to 155,000 feeds. That shows a real problem with relying on a centralized company to control and secure some really, really important data. But, Jen, what is your perspective here? Are you cool with being potentially spied on in this way? But also, what does this mean maybe for companies like Tesla and Cloudflare, which are quite prominent, in crypto and then also internet security in another way?
I think this story is a huge wake-up call for people. Like I often say that, I really do feel like people will choose convenience when they can, and they'll go with the larger companies because that's what they know. But look at what can happen on such a large scale. It's really, really scary. It's such an invasion of privacy, and I think it's just going to take this and unfortunately probably more hacks in the future to really make people and these large companies start thinking about what's going on. I mean, this happened to Tesla. That's absolutely insane. So I just see the story as a wake-up call. And I think it's going to start pushing people to educate themselves more.
Zach, you're a convenience reporter. Are you going to choose for one of these super secure, obscure, open source home data keeping? Like, where do you lie here?
I don't do any of that smart home stuff, man. That stuff's no good. I don't need that in my life. So that's the short answer for me. Yeah, I just keep thinking about that. Do you remember that story fairly recently where there was like the chastity belt that was hacked and it was like locked until the hacker received Bitcoin payment? Remember that?
Yep.
I keep thinking about that.
I don't know this story, Zach.
Yeah, that's like it's like the extreme like Internet of Things, like hacking, like red flag story.
Oh my God.
So I feel like it's sort of related to that, and I feel like these connected devices, like whatever the flavor, right? They present these moments of extreme discomfort. So that to me is what comes to mind. Nate, what do you got?
This also reminds me, if you guys saw Balaji tweet not long ago about he hopes face masks actually continue long after the pandemic, just for issues of like facial recognition software and video cams, just like keeping your face data safe.
Mm-hmm. Yeah, no, I was just wondering the same thing, and it was surprising. Sorry, go ahead, Ben.
I was just going to say, I should briefly jump in there and mention that Vice did a follow-up report on this where they got a spreadsheet of the client list for Verkada's facial recognition tech, and it had over 24,000 unique firms and companies on it. So that just shows how widespread, surveillance is already and how pervasive and potentially unsecure it is, which was kind of the point of what these hackers wanted to achieve by doing this in the first place. But, how about we stop surveilling each other and kind of clear it out for the day? I'm going to hand it off to somebody to close us out.
Okay, I'll close it out. Thanks for hanging out with us for part of your Wednesday. It's been fun. We'll be back again tomorrow, same time, same place. Until then, stick with us on CoinDesk TV, 3 p.m., all about Bitcoin. Tune in and have a good one. Thanks.
Have a good day.
See you later.